Hi, good afternoon, trader nerds. Welcome in. How come y'all didn't call an emergency meeting? How come you didn't call? We only got 11 people in here, which means everybody must have blown their accounts out today because the market is down 2.6%. Oh, be still my heart. So y'all probably blew out your accounts. So I'm very sorry. It was a good run. We had a great time. Who could have ever thought about the market going down over 2% in a day? It's just shocking. It's just shocking. We look at our big green monster. I mean, even the big green monster couldn't save the market. It tumbled, did it not? Here we go. Oh, be still. Oh, it's oversold now. And it's just sickening. It's sickening. So on $106,000 account, market, if I was all in the SP 500, I'd be down what, $2,500 over that, right? Probably close to $3,000. But no, our accounts blew up. So, good run, y'all. We had a great time. It was a good time. So let's just confirm that that's indeed what happened with a 2.6% move in the market. It just hurts, y'all. It really does. So let's see what our tasty account's doing. Might as well record the damage. Let's see. Here we go. Oh, no. Oh, no. 2 points. Oh, hold on. So embarrassing to be in front of y'all and to lose this much money in a day. Let's put it in here. 12, 15, 22, 37, 277, 14, 37, 277, 14. No, wait a minute. I'm sorry. Wait a minute. I'm down. Wait a minute. That's not that. How can that be? Hold on, y'all. I'm just shocked. I thought I would have blown this account. I'm down $4.57 on a 2.6% move down in the market. That's probably just, I'm sure that everybody's closing their accounts and doing stuff. So that's probably just a bad print. Let's go to the other accounts because that can't be possible. Let's see how this one's doing. Let's see, this is the IRA. Let's see how this one's doing. I'm sure this one's definitely blew up because this is an IRA. 106,308. Huh? That must be wrong. 106,308. How can that be possible? 106,308. Now wait a minute. Something's fishy here. You mean we're only down $21 today? I'm not believing that. Well, surely it's another misprint. Let's go to the third account. Surely to God, this one's at zero. After we've been down so much. Let's see what this one is. This one is at, where's my dadgum? 27,662. That doesn't sound like that would blow up either. 27,662. 27,660. You gotta be kidding me. 27,662 on a 2.5% down move. We're down $31. Y'all, what is up? What is the problem? It's amazing, huh? Well, something must be amiss. Let's see about these Greeks. I'm sure the Greeks are all out of line. Let's figure out what's going on here. So our Greeks were long 25 deltas, 95 thetas, 25.95. Let's put that in. 25.95. Huh. 25 and 95. Let's see. Okay, what's this old VIX doing today on this big down move? Let's see. VIX is at 20. I said it's at 22 still. Is that right? Okay. Say 22. VIX is at 22. I bet surely I've got a margin call though because I'm using so much buying power. 16,554. Let's see what that looks like. 16,554. So that did go up, definitely. So they're swelling me up there. So I'm at 44%. Oh, be still my heart. But look at that, y'all. Oh, ain't that beautiful theta? Oh, look at her, 0.25%. And am I panicking because I'm at 44% buying power? No, little old Bobby Jr. Let's go see the other accounts. What are y'all chatting about? Let's see. OB1 is Ken is down $4 in his Facebook account, $54 in his IRA. Unbelievable. Yeah. It's off 0.55% in the small account, 0.1%. His Greeks went up a lot. Yeah, y'all are having rough days, man. I mean, this is the day when we quit, right? So, I guess we'll abandon this strategy and go with something else because clearly something's wrong now, right? Oh, don't you love it? I mean, how resilient is this strategy? Y'all, I mean, I just love it. So, I mean, think about it. My account is at 106,000. Let's look at the big one. We're 106,308, right? So if I was down 2.5%, how do you do that? 106,308 times 0.975, right? Would be what my account should be today if we were all, and that's what I would be. I'd be all in the SP 500. So if that were the case, we should have lost, $3,000 in the account. We're down $21 on a 2.5% move to the downside. That's what we call, say it with me, beautiful, resilient. Y'all don't tell nobody. Let's keep this our secret, okay? All right. Let's keep everybody out of this. We don't want everybody doing this. All right. So with that being said, let's go get the Greeks for my other accounts. So here's the crimp zone. Let's go see what it looks like. So here, and the problem is when I was down 2%, when the market's down 2%, I was up on the day. That was a crazy thing. Right. So here we are. We're at 17 deltas and 46 thetas. 1746. That was a good year. I remember it well. 1746. See what this looks like. 46. We said VIX is still 22, we think. So, okay, let's see how much our buying power swelled. And that's what happens with our little span margin, y'all. You just got to be ready for it. 13,701. 13,701. Went up considerably, 13,701. So we are at 49%, almost 50% of our buying power usage. Mama said there'd be days like this. Mama said. But everything else looks really good. Okay, I'm not concerned about that account. Let's go to the other one and see what it looks like. The Bobby Beth. Here we go. So we are at 42,128. 42,128. Look at that beautiful theta, y'all. 42 and 128. Oh, ain't it pretty, pretty, pretty. Finally, I get in the green. Took a big down day to do it, but I am in the green there. And our buying power has probably swelled to the point that I'm getting a margin. 47, 101. Well, that swelled a lot, didn't it? Okie dokie. Let's see what we got going on here. I'm using 44% buy. Okay. My deltas, I don't think you're ever going to have a problem with deltas. Matter of fact, we could probably stop even monitoring them if you wanted to. But who wants to take away the fun of that? So our con delta, our conservative deltas, we could be as high as 159. We're at 42 for the love. And these things swole from yesterday because market goes down. What happens to our deltas? It's an inverse relationship. Our deltas go up. So this account looks really, really, really groovy. Really groovy. Okay, so, you're sitting there going, Bob, I kind of hate having that much buying power usage. What could you do? Right? What could you do? Well, you could close some stuff, right? So let's just see how our little 2-day options are doing here, or 1-day options, right? And here's the thing. Well, should you close them? There's something. Look at these nakeds. Wang. I lost $1.16 today. Boo hoo, bahoo hoo hoo. I'm still 98.5% on a 2.5% down move. Unbelievable. What does this look like? Let's see what this looks like in our little thing here. I mean, these things expire tomorrow, So let's see what this looks like. So we'll go to trade. We'll go to the curve. We'll go to the analysis. I don't know, y'all. Y'all scared about that? Anybody scared? Anybody need to call your mom? Let's see what this looks like. Looks like that's a 1 standard deviation move from where we're at now. Looks like that's a 2 standard deviation move. My gosh, we go all the way out here and all I see is the lovely plains of Texas with profits. Look at that, y'all. Is that not a thing of beauty? Unbelievable. Little old Bob says, I kind of, I mean, yeah, if I wanted to get a little bit of buying power relief, I could close some of these, but why? They expire tomorrow. And if the market goes down, look what's happening. I'm in profits. I'm in a wonderful little profit team. I don't see it. I don't see why I should close anything. Right? Well, Bobby, those other ones are probably looking bad. Let's look at your other positions, you fat black glass wearing son of a gun. All right, let's look at these things. Let's see what this looks like. Oh, be still my heart. There you go. Let's get some of these things in the profit tent, baby. Come on down, baby. Come on down. Daddy is waiting with my army of whatever these things are, rooks and knights and bishops protecting the royal family down here. This is where you got Princess Meghan and Markle and what's his name, and William and all them, Kate and Fergie and all them people. They're all down here, and they're protected by all these up here. So then you got, here's Camilla, there's Charles. You got them all down here, y'all. I mean, we got the whole dang family, the whole royal family. So when I close any of these, let's see, how are they looking? Bob, oh, Bob, you got stuff at 94%. Bob, take it off. I could, but look, on a 2.5% down move, my nakeds are down $2.50. Oh, be still my heart. Why would I take that off on a 2.5? I'm only down 2.5. Yeah, you could. You could. What about those that we put out there at 90 something days or 80 something days? Where are they? Oh, I bet those are blowing up, aren't they? Oh my gosh, now $71. Oh, be still. I mean, let's just close the whole thing, go to the house. Look at that. Down to negative $102. Why did I even sell stuff? So I'm sitting here and I'm going, I don't know, man. I don't think I feel like closing anything. Let's do some deep dive analysis. You want to? So let's go, let's do this. Let's show our groups. Let's say our nakeds. My sweet Bobby Hedges. Boy, that's paid off, isn't it? My put debit spreads. That made me $770 today. Thank God we got T-bills in here because I made $3.78 today. Look at this. Here's what we like. What's this? The naked puts are down $800. But my put debit spreads, God love them, y'all, are up $763. Do y'all see how this is kind of a cool hedge for this? Isn't that awesome? So then you could say, oh, I don't know, man, I'm scared to death. I got these 6 puts right here with 1 day to go. These 6 nakeds, these 4 nakeds, these 2 nakeds, these 2 nakeds. Take them off, Bob. You're at 98.57%, friend. Take them off with 1 day to go. Well, let's look at them, shall we? Let's look at them. So let's go over to the analysis tab. Let's see what you think. Make this the micro. Make this the micro. Hide any simulations. And let's do all groups, single symbol, and let's just show what's expiring tomorrow. There she is, not quite as pretty. Miss America. How's that look to y'all? Look at this, y'all. Look at that. And you telling me in 1 day that thing's going to pop up? What? Pop! That's the 16th. Pop! There we are. We have expired. Look at there, y'all. I mean, even from today to today, here's today, right? See my little profit hump here? Let's go up another one to tomorrow. Look at it, it just gets stronger. And that's when my naked's on there. So if I'm making if I'm sitting at a poker table and I go, I don't know, man, I may take these out. I'm just sitting there, I don't see it. I don't see it. Maybe y'all do. So let's see where this is a 20% move down in the market. We expire there. I'll be up down 5,000 today, but if we expire here on the 17th, look, I'm up $3,000. What's an $8,000 swing? I don't know. Yeah, but I don't want to get on to y'all if you do. If y'all are wanting to close something like that, close it, baby. Take your stuff and go to the house. But to me, it looks really, really safe. Maybe we could just see what it does to our buying power. Just close one. You want to play with it? We could play with it, you know, or you could go over here and go, I don't know, man, let's close one of these in another expiration, 95%, 94%. Don't worry about the 1 day stuff. You can even, I think you can like, yeah, we can sort these by percentage profit, right? So you take off these 6 here. How much money is that going? I mean, I don't know, man. I mean, I'm sitting there going, why would I take that off? Right. So if I, let's say which one, 98.37, 98.57. You know, let's play with it. Let's take off the, I don't want to take off a lot. Let's just see what this would do. How about this? 98.26 there. Let's take this off. Create closing order. It says 50. Because if I close those 6, it's going to cost me a lot of money, right? I mean, why do it? See if we can get filled at 20 on these for the 2 31.90s. See what it does to our buying power. Cost me $4.94. Let's just try. Let's see what it does. Never bad take profits. Okay, so we took off the 31.90s at 20. 2 of them. So let's go put that in our spreadsheet. What was it? The 31.90s? 31.90s with 2 1 days to go. 1 days to go. Here we go. So I took off the 31.90 right here. Naked put 16. And that cost me 20 cents. Should be $4.94. Please work. There you go, baby. And we got out of that on 12, 15, 22. Making us $107.12. That's worth playing the Jefferson.
Well, we're moving on now. To the side. To a deluxe apartment in the sky.
You know, and I only did that. Why did I do that? Not because I had to do it. I just wanted to just kind of show y'all that, hey, you can do it. You can take that off if you want to. And it probably gave me a little bit of buying power relief. Let's see. Now, markets are moving. They may have moved down, may have swollen more. So it'll make a liar out of me. So now our buying power is 46,408. 46,408. Over here, we were, 46,108. Now we're at 47,108. So we're at 46,108. So now we go from 44% to 43%. Okay. Yeah, that's fine. I got no problem with that. Take it off, baby. Take it off. But I think I'm just going to be just fine. I mean, I probably spent $4.30-something that I didn't have to spend. But if you're a prudent risk manager and you're worried about the risk, yeah, take them off. Take them off. Because on our new ones, we're going to start taking all of those off, aren't we? On those, we're going to start taking them all off because we're going to start putting them off, closer to 90 days. So we'll end up taking them all off at some point. Just making them stronger by putting them out farther in time. And I don't know, man, it just looks really, really good. So now let's see what my little hump looks like. Now we'll go over here, back to the Analyze tab. What did that do? That just should have beefed that up a little bit more, right? Beef it up a little more, by taking the naked put off. So all kind of things that you can do to handle your risk. So I don't want you to freak out today if you are at, the 50% buying power like we are in one of the accounts, 49, 44%. No, don't panic. Don't panic. I think it's fine. Remember, I think I've got a hypothesis that we can probably keep it at 50% all the time. Now, I don't recommend that. Probably taking too much risk, might blow it out. But because we're at 49 here and our theta is, we're okay on our theta. I don't think we're taking too much risk here. Just hold the course. Let this settle down a little bit. Bobby, what if it doesn't settle down? Well, we'll worry about it then. It's like Beth. Beth, are you here? She's still, I think her and Devin's at the Chinese restaurant. So, Beth worries about things that don't even have a probability of happening. And I've always worried about, I'm like, Beth, you are worried about something that could potentially happen, but it probably won't. Well, Bobby, what if the blah, 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 blah? And I'm like, but stop it. Don't worry about stuff that has not happened and probably won't happen. So you can't spend your time focusing on the disasters that may happen on a 2.6% downwind. Y'all, we could be up by the end of the day. We don't know where this thing's going. But if I had to guess, we're going to rebound, right? We are, if we believe our big green monster, we are oversold. We are most probably going to come back to this point of control. It could be today. And I still believe that we're going to fill these gaps and be bullish for a while. So we don't know that. So if you're worried, you have options. Your trading plan, your written trading plan, which 98% of you do not have, should say what to do in this situation. Mine gives me the prerogative. I have the sweet prerogative. I can close stuff. I can do nothing, right? My deltas, I'm delta neutral for all intents and purposes. My theta is groovy at 0.17%. And yeah, I went 30% yesterday and it pumped up now. Well, Bobby, what if you pump up another 20% today? You bet 69%. Hey, friend, I've been at 90-something%. It don't scare me. Look at this. It doesn't scare me. Y'all seen this before. This ain't our first rodeo, y'all. Maybe not in this camp. Yeah, it was in this camp. There it is, 94%. What did Sweet Bobby do? Nothing. Not jack squat crap, nothing. Oh, Sweet Bobby just kept doing the thing. Look at that theta. I was at 0.75%. It should have been at 0.30. My deltas should have been no higher than 38. I was at 65. I panicked. No, we didn't panic. I only had $1,300 left in buying power. So hold the rope. Hold your course nice and steady. If you want to take off one, okay? I don't think you panic and take off everything. Take off something, just get you a little buying power relief. We could do that in the other camp. Let's see what we look at. Let's go to the Crimson account. Here's the Crimson account. Let's see what we got here. Look at there, y'all. They're at a penny or a dime. A dime. Now I make you take that off for a nickel. But again, why would I? It kills me to close that when I go, you know what? And look, it didn't even lose any today. On a 2.5% down, but look, this one's up. Are you kidding me? A naked put 34.30 is up a quarter on the day on a 2.5% down. But why am I closing these? Why am I closing? I don't see the need. But y'all got to do y'all. I understand your risk parameters aren't mine, but let me tell you something. I woke up early this morning. I took 2 Benadryls last night and only one. What's that thing? Those gummy bears I take. I can't never remember that stuff. Melatonin. And y'all, I slept like a baby, like I was in a coma. I woke up this morning and I was at the gym by 8 o'clock this morning. We did an hour and a half. Me and my daughter did an hour and a half. We did an hour of cardio with 30 minutes of weightlifting. I mean, she was like, we're going to do another 30 minutes. I said, let's do it, girl. Let's get back on the bicycle. Let's go another 30 minutes. So we were just killing it. So I've had a really productive day. And after this is over, I'm probably going to take me a little nap. I'm going to lay down a little bit. And I ain't going to watch this stuff for the rest of the day. Are you kidding me? He'll call me he'll call me if it's down 10% or so. But I don't see it happening. I think we're good. I think we're going back to the promised land. Why are we down 2.43%? I don't care. Do y'all care? All I know is my metrics say, hey, Bob, 2 of your 3 metrics are fine. This is a little elevated. Hey, you want to take a little skin out? Want to make a little profit and reduce that? Fine. Now, what you could do is go over to your Analyze tab. Let's put it back in our groups again, just to show you what you could do. Let's show you how to do it, how to make these decisions, right? So let's go back and put our groups in again. So we'll show our groups. All right, we got the Analyze tab. Let's say you want buying power relief. All right, you want some buying power relief? One thing you could do is you could buy some cheap puts, right? If you want to buy some cheap puts, why you do that, I have no idea. When you can take profits on things that are already open. And let's just look at, let's look at high simulations, 12.15, make sure everything's right here. 12.15, let's do our naked puts, right? I'm on the wrong symbol. There we go. Yes. There we go. So here's our buying power right now. We got $13,747 in buying power in this account. All right. So you want to reduce that, right? So what you could do is kind of go down here. Let's see if I were to say naked puts. Okay. So my naked puts in and of themselves are taking up $17,000 of buying power, right? So you want to get something like this, and you take something off, then just kind of see what happens. What's this? This is how you do it. You go, hey man, I need some relief. Oh, what a relief it is. So you could go down here and say, well, what if I took off 2 of these 3180s? Let's see what that does. So I go from 17,276 to 16,757. Again, click on it, pop, 17,374. You take this puppy off, boom, 16,757. And then you go, well, what about the first series? The first series naked puts, we could even do those, right? So the first series naked puts are taking up $1,218 in buying power. You want to close all of those? You're going to get $1,218 in buying power relief. Isn't that cool? Don't you see how the analysis tab is just so powerful? Let's go find them. Yeah, so here they are, right? We got 4, we got 6 of them. These 6 right here. So if you were to take these off, cha-chonka, cha-chonka, chonka, look at there. Boom, jaka-laka. You just took off how much of buying power? We took off $1,224. So you say, okay, Bob, let's don't do the first series. Let's do all 5 series again. Let's take that off. And let's do the second series, right? So this is our, 15-day options? I said this is our 15-day options. Let's see where they are. Naked puts, yeah, so 15. Yeah, we got 2 here. Then we got 15-day options. What do those look like? Okay, those are taking up $8,000 of buying power. Ooh, rough, right? It's a lot. So what could you do? Well, you can start peeling those off, right? Say this probably make a profit. This is way out there, 3180. What if I took off this 3180? It's going to give me $600 of buying power relief. Okay, well, let's take off a little more, Bob. Let's take off that 3190. Boom, chakalaka. Look at there. Now we're down to 6,700. Take off another one. So take off these 2, 6,700. That takes off another 700. You see how you do this? So you guys should be able to say, oh man, if I want to get back down into my thing, all I got to do is take some profits. These things are all profitable, I'm sure. Let's say our 15 days are. Our 15-day stuff, look at this, 95%, 94%, 92%, 88, 85. Look at that. I mean, it's just, we are smoothly just making money hand over fist here. So why do anything? Why do anything? Let's look at our, let's look at the Analyze tab, and let's go now to, let's get all of our series. Let's go to our put debit spreads, right? Are any of these in the money? Let's see if these are. Let's look at our closest in expiration put debit spreads. See what these look like. Man, if they're in the money, Bobby, you can close them for profits. Well, don't look like anything's in the profit. There's P&L on the open. They're losers. P&L on the day looks much better, right? And you're sitting there going, drop, baby, drop. Go down here. Oh, here we are. Here's where we are right here, right? P&L on the day. Even they're not making any money on this day, but they're here for a reason. We got them for 1-day protection, right? We go down another 5%. We're up $63. We go down 12%. We're up 1143. And if we go down 20% today, those little puppies are going to be up 3,000 some odd dollars. So they're there for a reason. They're there for a reason. All right, let's see what y'all talking about. Yeah, Ed, the PDS getting stronger every day. That's what they do. Kyle, can you show us the risk graph? What does your tail risk look like right now? Okay, Kyle, you want to scare the children? Let's do it. Let's look up the bad tail risk. Here we go. So we'll do all 6 series in this little account. Now, this is where y'all get scared. This is where you get scared if you look at this, okay? So what does the tail risk look like? Tail risk looks like this. Just make sure I got all my groups, hide simulation, single symbol, take it all off, put it back all back on. For this one expiration, 20% down, looks like I'm going to be down $33,000 in a $27,000 account. Thank you, ladies and gentlemen. Bobby has blown out the account. But it's even worse than that if I add volatility, right? If I add volatility in there. On a 20% down move, I would be still, and let's say that the VIX were to get up something like 49 or 59, little old Bobby, they're coming from my house. Now I'm down 46,000, 51,000. When you look at the price slices on this 20% down movement, right, it looks like this. My buying pair is going to be $80,000. It says my profit and loss for the day is $33,600. And P&L on open is $33,000. If we were to go down 20% today, Yes, it looks miserable. Now, where does your boat broker looking at their risk? They're looking at the risk on the downside at this 12% level, right? If we were to go 12% from here, my theta would be 759, my vega would be -56. I would have lost $7,000 on the day. My buying power effect would be down to 47,000. Now, what can you do? You could go through here again, right? And say, yeah, but what if I start closing some of those naked puts that I've got profits on? Absolutely. You can close everything that you want to if you don't want to take this risk. Right. But at this point, losing $7,000 in a $20,000 account with 12% down move, I think I'm okay. I think I'm okay. Now I'm going to have to do something to get my buying power back in line. What do? We're going to sell a couple micro futures. We may buy a few puts. We know how to get that back down, but a 12% down move, not going to kill me. Not going to kill me. So what would we then do after I get my buying power in line? What is old sweet Bobby going to do? Problem children. So I'm going to put the children in timeout. I'm going to isolate them. I'm going to roll them out in time. We're going to turn the lemons into a lemon meringue pie. That's what we're going to do. Because I'm not really a big lemonade person. Kind of rather have lemon meringue pie. Oh, by the way, did I tell y'all I had a Dairy Queen ice cream yesterday? So I was sitting there, I was looking up the calories, and I go, you're kidding me, 320 calories for a medium? I said, give it to me, baby, all day long. All day long. I wanted the large, but it was like 460 calories. So I sit there and I just savor my Dairy Queen ice cream yesterday. Medium. Whereas I normally would have got a large blizzard. I'm doing good. All right. Dwayne, if you think the market will rebound, perhaps today, even when would you close a debit spread? So I would only close my debit spreads if they are in the money and profitable, right? So, let's just look at that. What's the maximum I can make on a put debit spread? 50 points wide. Anybody know? Let's look at these. These are my put debit spreads. So let's just play with one. So here's the 30. So let's get the farthest, the closest to the money. 35.20. And the 35.20. Y'all help me do the math. This is put debit spreads. 35.20. So that means I would have 34.70. Where the crap is my 34.70? Must have been one of those I closed. All right, let's try another one. I got a 35.30, which means I would have a 34.80. Guys, I closed all of them already? Unbelievable. Wait a minute, that's a quantity. Wait a minute, that's -1, -1. Where's my darn positive stuff? Hold on. Okay, I don't have them sorted by days. Here we go, there we go, okay. Now, this makes sense. So this is my closest one to the money, right? So I got a 35.80, which means I have a 35.30, right? So if I were to close that one, what does that look like? Create a closing order, sell the vertical for 5 cents. Oh, be still. Or maybe 20 cents. See that you ain't making no money. Ain't none of them in the profit 10. So, we're just gonna let him expire. Nothing in my one day is even close to being in the profit 10. Let's see it again. Let's see just my put debit spread. So come on, Bob, get it together. Expiration 1. Let's see. Takes me a while. Take it all off, take it all off. Take my put debit spreads. There's my put debit spreads. The ones expiring tomorrow be the only ones I'm worried about. See, they're not even in the money. They're not even in the money. Nothing to do. Let's look at it on Tasty Baby. Let's see how we do this. Oh, sorry, wrong one. I got to get the right position. Oh, here we go. That's those. So we'll go trade analysis. Let's take off the naked stuff. So looks like that's a naked, that's a naked, that's a naked, that's a naked, that's a naked. Wouldn't you like to be a naked too? Okay, that looks like that must be a naked. Naked. Oh, that's our, yeah. One day naked. We know these things are naked, right? Wait a minute, that's a positive 2. 35.70. So this must be a put debit spread 2. Okay. That's right. I just went, okay. I think I got all my nakeds down. Let's see what these look like. See, ain't nothing in the profit tent. Look at there. They all losing. So there's really nothing to do with those puppies, right? So if we actually want, if we were gonna close these for profits, we would want this to come down into there and starting, closing in the tent, but there is no tent to be found. These are just losers that will come off after tomorrow. Nothing to do, nothing to do. Let's see if the market's still rebounding. I hate to quote Warren Buffett, it's when the tide goes out that we find out who's been swimming naked. Oh, wow, how about that? Like that, I guess. Where's the tent in that view? Well, Brad, you'd have to do your individual positions then, right? So we could do this. Let's see, we could do let's see, 35.90. Get the one closest to the money, right? So that would be here, right? 35.90 is my closest one, right? And then that would be 35.30. There she is. Okay, so that's the closest one. So that if that's my closest one, all the other ones are farther away. So check this out. I mean, I ain't even close to being in the money. There's nothing to do there, but leave it on, baby. You leave it on there as a lottery ticket that could potentially offset some losses if we were to go down farther. But there's nothing to do. Nothing to do. Going to the vampire for a blood. What is that word? You're earning? Adios. Oh, you got to go get some blood work on. Kyle, curious why you don't keep a black swan hedge wall in place at all times. It seems like a cheap way to sleep easy. I don't know, Kyle. I sleep good, baby. I understand what you're saying with the black swan hedge wall, but profitable, yes, but wait until in the money. I mean, it's not profitable. That's the thing, though, is it? I mean, it's not profitable. I would be closing this at a loss if I close it today. Show the linear regression chart, please. Absolutely. And just because let me see what they say to me. DraftKings, Hi Carson, I issued let me see. I have caught Dr. Kim on this message. Override. There you go. We take care of people. If y'all want to take my college course and you don't have the prerequisites, guess what? I get rid of them. I don't care if you have them or not. Like I'm gonna keep somebody from taking my class because you hadn't got some goofy course in whatever it is. Let's see what the thing looks like here. We go to the top, we're going back to the bottom, but I mean, it looks perfectly orderly to me. Everything looks orderly to me. And we're probably going lower, y'all. I don't know. My Big Green Monster says otherwise. Big Green Monster says we're probably gonna pop back up first. So we'll see. We don't know anything. Anybody that tells you they do know, they dumb as a box of rocks. They don't know either. We don't know. We do know that this little 50 line here, 50-day moving average, will probably serve as a little bit of support. Just kind of like the 200 daily moving averages kind of served as resistance. That cool. That all just comes together. Look at us technical analysts here. We're technicians, we're quantitative analysts. Yeah, and I understand y'all, some of y'all, from what I showed y'all over here, some of y'all wouldn't be able to sleep at night. I got you. That is not me. I am not in that camp. I am more than fine. Let's see how our hedges are doing. Do we have any Sweet Bobby hedges here? Let's see what that looks like. Oh, the Valley of the Shadow of Death. What does it look like when I pop my ball up on it? My ball steps. Look at there. Sweet Bobby hedge. They're making me $2,100 on a 20% down move. It offsets some of the hey, sure thing. And that's what we're working at, right? We're working at moving these in now. Of course, the volatility is kind of staying bid, and that's what I was afraid of. When volatility stays bid, these things can be a little bit of a drag. They're not as fun as when you're in a 15 to 17 VIX environment. They're easier to put on. They're easier to put these hedges on. That's why we were like, we didn't go full blown Sweet Bobby hedge. Let's go get 4 tranches to start with, and let's keep the campaign going. No, we was just like, you know what, let's slowly go it, baby. So what are my Sweet Bobby hedges? Let's see what I got in the Sweet Bobby hedge. I got 2 longs and 1 short. That's all I've got. Okay, so I don't have any other ones that are started. How much money are those down? My little Sweet Bobby hedge. Sweet Bobby hedge now $2.50 on the day, now $30 altogether. Now 300%. Close it. Go to the house. Call the mama. All right. You want 10 what it is? What did I say? Y'all got any questions on you? Good Lord, collect my garbage, baby. Look at the garbage I got in here.
It may be me, Bobby, but I can't hear you.
There we go. I'm back. Thank you, Rick, so much. Don't know why I did that. Yes, I mean, if we do go down 20%, you know, y'all will be so upset that you didn't close those things for profit. I got it, you know, it's a fine line, baby. It's just risk, man. You want to manage your risk, get your numbers back down, do it. Close those things. I don't want you to think that just because I'm not, that you shouldn't. That is an individual decision that I cannot make for you. I'm sleeping like a baby as long as I take my Benadryl and my melatonin. And I don't eat too much banana pudding before I go to bed. I'm doing just fine. Now I'm on this angel food cake kick. It's a sugar-free angel food cake. Oh, y'all, you can have like half the cake for 100 calories. And I'm like, man, this is the best thing ever. With a cold glass of 2% milk. Oh man, this stuff is good. The time of that. So I think the takeaway from today's session is this. Are you comfortable with your risk? I am. If you're not, get your metrics back in line. I got that. You got profitable trades in your thing that you can close right now. Take the profits and you know, take your risk off. That's fine. Either way, it's going to be fine. Now, if by the end of the day we're down 10%, you know, I'll probably be closing some stuff. But right now, 2.72%, I'm good. I'm good. Know your risk, you know, enjoy your risk. So Dwayne says, I have a 3,800, 3,850 debit spread with 36 days. Its probability profit is 33% at this time, although it's not in the money. It is captured 15% of maximum. Would you take it off at some percentage of maximum? I wouldn't. I wouldn't. I mean, and the reason is, Dwayne, is because if you're only at, you know, 25 to 50% of maximum, I mean, it's the reason that we have to put debit spreads is to provide protection for the naked components, right? So where we make our money is not to put debit spread. You and I make our money from what? The sale of royalty, our kings and queens, our nakeds. That's where our profits come in. The put debit spread is there to protect, to offset. So my personal opinion is don't look at those put debit spreads as any profit center whatsoever. They're, you know, they're expendable pieces, but you want to keep it there because even at 50% profit, when you can go another 50% with 36 days, it's there to allow the real profit drivers, the royalty, the king and queen, to do their job, which is to make us money. Now, you know, if you got one that's expiring tomorrow and it's 50%, you know, profit, and you're like, man, if the market comes up, it's going to be zero profit, you know. I mean, I could see maybe taking that off, but at 36 days, that baby is just now getting strong. Let it get stronger. So what if the market continues selling off? You still got those naked puts behind it, right? So let it do its little job of protecting everybody else. All right.